Inside America's Boardrooms, the informational show for board members and corporate secretaries. Brought to you with Knowledge Partners, Diligent, PwC, Center for Audit Quality, the Conference Board, and Corporate Board Member. Along with content contributors Equilar, Meridian Compensation Partners, Wilson Sonsini Goodrich and Rosati, Donnelly Financial Solutions, and the Society for Corporate Governance.
Welcome to this edition of Inside America's Boardrooms. I'm TK Kerstetter, the CEO of Boardroom Resources and the co-founder and editor-at-large of Corporate Board Member magazine. We're here in New York shooting from the Conference Board studios, and once again we're going to tackle a topic that sometimes makes board members' eyes glaze over. But the purpose of this show this time is to see if we can't dissect that a little bit and make it more understandable. So we're going to be talking about what corporate boards should know about cryptocurrency. And joining me is Grainne McNamara, who's a principal with PwC's digital team. Welcome, Grainne.
Thanks so much, TK. So great to be here.
So there was such a groundswell about what we did on blockchain, okay, that it only made sense to have you back so that we could talk about other related factors to that.
Right.
And the term that I think is used by the press is cryptocurrency. But as you were explaining to me, and I'll ask you to explain to the audience, that's not necessarily the right term, but explain that and give it a definition, if you will.
Yeah, no, absolutely. And I love to be able to break down what is really a complex, dynamic space and really help companies sort of get their heads around it. So many people have heard, of course, of Bitcoin, which is a cryptocurrency, which sits on top of these blockchain ecosystems. And so that one will perhaps be notorious and familiar to folks, right? So they'll have heard about dark economy uses of that. They'll have heard about cyber scandals in some cases where these Bitcoins have been stolen from wallets and other things. But I think and they will also, of course, have heard about massive, sort of cliffs and valleys in the actual valuation of that asset. And of course, they will ask themselves, what's it all about? Why do we need a different currency? And why do we need such a wildly speculative currency as a store of value or a medium of exchange? And of course, those are all good questions. But this is much bigger. What we're seeing happening is way bigger than Bitcoin and the price of Bitcoin. What we're seeing happening is the emergence of a whole new token economy. And there are lots of other facets to this token economy than simply what is intended to replace a currency. And so I really would like to break that down and explain to the board members sort of what we're seeing and the sort of innovation that's coming into the space and where it's coming from, which might actually surprise folks.
Well, let's get there then. So let's talk about where it is and how it's being used.
Yeah, absolutely. So whilst people might have thought it was a little bit the wild, wild west with Bitcoin and new startup entrants coming into the space and arguably looking to disrupt financial service providers and traditional banks and so on, what we're actually seeing now is that in fact we're seeing different types of offerings that are coming on board. So on the one hand, we had the Bitcoin, which is intended to be a currency. There's sort of three other asset classes that we're seeing develop here. The first case is what we might call a utility token. So entrepreneurs that are building technology platforms are coming to market and they're offering access to those platforms via these utility tokens. Now, people will appreciate that in the United States, the SEC has said if in fact that platform is not built, then that in fact is a security offering. And so that needs to be registered as such. And so, we're seeing people, again, coming to market with bona fide securities offerings that they're looking to register under the Securities Act of 1933. They're compliant offerings. They're bringing to market a security offering that on the back of it is really an investment in some entrepreneurial technology endeavor to build a network of some sort. So that's an important area to consider, right? So really, it's investment in technology, fintech, typically the type of technology that would be used to provide financial services. Let me talk about one other aspect here, which is really important, and that is what we're calling asset-backed tokens. And in this case, what we're seeing is traditional providers of financial services products, are using these asset-backed tokens to represent in a digital blockchain ecosystem their assets, such that they could provide more liquidity and the opportunity for fractional ownership of these maybe sometimes quite illiquid assets. So think about large art collections, think about real estate, which might not be trading in that liquid of a fashion and might not be accessible to everybody in the investing public. So what's happening here is you see traditional providers of financial services working now with these new entrants to the market in this crypto economy, in this token economy, in order to bring liquidity and access to these investment opportunities. And so people think this is socially desirable. People think this is quite inclusive. People think that as long as these opportunities and these entrants to the market are obeying the rules and providing and demonstrating that they want to deliver compliant offerings into the market, then we see huge opportunity for the fintech developers and the sort of entrepreneurial community to partner with traditional providers of financial services to expand the offerings to both retail and institutional investors in these companies.
So that means regulators have to keep pace with what's going on as well.
This is a hugely difficult task globally for regulators. And we've seen here in the United States certainly quite an open posture over the last several months for regulators. You will have noted the Treasury Department just issued a report. I would encourage board members to look at that. And it's talking about innovation in financial services and their attitude and disposition, if you will, toward that innovation. And what I would say is that it's, again, really looking to embrace the innovation, but looking to make sure we don't throw out the safety and security and soundness of the financial system as we do that. And so we also see the OCC coming forward to say we are open for business for folks that want to register themselves as banks. Why? Because we want to regulate them as de novo banks, but absolutely embracing that we do see entrants coming into the space, providing what are really valuable sets of services to the market that are looking to be compliant and looking to be chartered and looking to be regulated.
So most important part of this is what questions board members should be asking themselves and asking management about digital currency or token currency or whatever we want to call it.
Yeah, so let's start with the digital currency, because if, again, I'm in a financial institution and I may have a stated risk appetite that says I don't play in the space, I don't touch digital currency for whatever reason. I'm fearing the dark economy, I'm not comfortable with the AML or, know your customer, anti-money laundering type procedures, and I may have a stated position that says I don't touch it. If I'm a board member, I'm going to ask management, how do you know? Because what we see is that, in fact, you may have peripheral risk to the sector without intending to. Why? Because you're banking some of the institutions that are players in the space, because you have retail investors that are playing in the space, and therefore funds are moving in and out of crypto and back into fiat. So what I would say is, ask management, how do we know if that's the stated risk appetite? How do we know that we've got it? The second piece is, I would ask management, how do we know if we're missing it? Is there something here in terms of what I talked about that are compliant, registered opportunities for us to take assets on the balance sheet or take other data monetization opportunities that we have and put them into these networks? And maybe that means that we're going to have an alliance with another member of our ecosystem to bundle an offering, to attract a new type of customer base. Don't forget, a lot of these crypto investors are sort of the young, mobile, social, millennial investors on the retail side, and huge amounts of institutional money is coming in to back that. So again, if I'm a board member, I would ask management, are we missing the market? Are we missing out?
Where can people, again, this is another topic that we're just scratching the surface on.
Sure.
So is there publications or is there research that's available that people can put their hands on?
Absolutely. I would definitely refer people to the Treasury Department's paper, and I would also refer them to PwC's website, where we do have a Governance and Insights Center. And in there, what we try to do is take these complex topics that are quite dynamic and try to break them down for people who are in management and on boards, such that they could try at least to stay current. Hard as that is.
Well, thank you again for coming back. Again, we'll see what kind of reaction we get to this, and maybe we'll have to have something else explained as we go through the process of trying to understand all this.
It's certainly evolving.
Yes.
Yeah.
So thanks for your time, Grainne.
Absolutely.
And that will conclude this edition of Inside America's Boardrooms. We hope you enjoyed the show. We'll be back again next week when we take another look at a critical topic that'll help you be a better board member or committee member. So we'll see you then.
Join us again next week for Inside America's Boardrooms. Brought to you with knowledge partners Diligent, PwC, Center for Audit Quality, the Conference Board, and Corporate Board Member. Along with content contributors Equilar, Meridian Compensation Partners, Wilson Sonsini Goodrich and Rosati, Donnelly Financial Solutions, and the Society for Corporate Governance.